This is a video I made talking about investing in gold, which I published on September 27, 2021, when the price of gold was around $1,750 per ounce. Since then, the price of gold has soared. It has recently passed $4,000 per ounce, and at the time I'm making this video, it is just below $4,200 per ounce, which is double the price from the time I published that first video I made talking about gold and investing in gold. And the soaring gold price has been making headline after headline on financial news sites. And I didn't only make one video talking about gold. I've been talking about gold in multiple videos that I've published in the past few years. It's a topic that I've really been talking about, and it's a topic that I think it's important and that people should learn about. So why did I have such a good feeling about gold back in 2021 when the price of gold was less than half the price it is now? There are two reasons why I thought the price of gold and gold would do well and buying gold would be a good idea back in 2021. The first reason is that central banks are shifting away from US dollar assets and towards gold assets. And the second reason is the inflation problem, which is originally the problem I focused on back in 2021. But in 2022, when the sanctions on Russia happened after the Russia-Ukraine conflict escalated, I think the first reason became a lot more prominent. So let's talk about the first reason why back in 2021, 2022, when I was making videos talking about gold, why I thought gold was going to be a good idea to buy. And the first reason is that central banks are shifting away from US dollar assets and into gold assets. And you can understand why if you understand geopolitics. A lot of countries don't want to be vulnerable to US sanctions. And I think in 2022, when the US imposed sanctions on Russia, when Russia escalated their conflict with Ukraine, a lot of countries realized that they are very vulnerable to US sanctions if they keep a lot of their central bank reserve assets in US dollars. So which asset should they move towards? There's the euro, of course, there's the Chinese renminbi, but if you think about it, gold is the form of money that central banks really rely on. And gold is essentially money. I think that's the mindset I had when I was talking about gold, and it's a mindset that not every investor shares. For example, Warren Buffett, who's very intelligent and very successful, he doesn't see it that way based on his interviews. He doesn't see gold as money, which is something I disagree with him on. And of course, he's a very intelligent person, but even very intelligent people, even the most successful people in the world, can be wrong on some things. And I think Warren Buffett is wrong on the topic of gold. He's right about a lot of things, but not everyone is right about everything. Warren Buffett isn't right about everything. He's right about a lot of things, but he's not right about gold. And the reason why is because his mindset isn't thinking about gold as money. His mindset is thinking about gold as an investment. And I don't see gold as a traditional type of investment like stocks or real estate. I see gold as money because gold is essentially money. It's the money that was used throughout history, and even up until World War I started, it was money because of the gold standard, because currencies were linked to gold. You could exchange a certain amount of British pounds or US dollars for a certain amount of gold. So gold was money, and it continued to be used as money up until 1971, when Richard Nixon terminated the convertibility of the US dollar to gold. So gold is essentially money if you think about it, And it's money that is actually valuable even if it's not used as money, because gold is used in jewelry, it has other applications in technology, in industry, and it's valuable whether or not it's used as money. But throughout history, it has been used as money because it's rare, it's beautiful, and the supply can't really be easily manipulated, unlike other precious metals. So it's a very reliable form of money. And that's the way you should think about gold. I think JP Morgan once said that gold is money, everything else is credit, and I think it has a lot of wisdom to it, that quote. Gold is essentially money, and that's why a lot of central banks, when they realized that their nation would be vulnerable to US sanctions if they keep a lot of their central bank reserves in US dollars, they realize that they need to shift away to another asset. So which other asset? And the common sense answer is gold, because gold is more reliable. It's less political. You can't really freeze other countries' gold assets if you don't actually hold them. Unlike US dollars, the US government can freeze US dollar assets of other countries, but he can't if other countries are holding gold physically. The US can't freeze the gold they hold in their own country. Of course, if they hold it in New York or London, then the US or the UK can freeze those gold assets if the other countries are holding their gold reserves in New York or London. But if they're holding it in their own country, it's in their own country. It's really theirs. It's physical, and that's a big attraction to gold. It's physical, you can hold it. It has real value, whether or not it's used as money. And even though in 1971, Richard Nixon discontinued the US dollar convertibility to gold, central banks still treat gold as money. Like the Federal Reserve still holds a lot of gold because it considers it as money, and other countries also hold gold because it considers it as money. You can convert gold into whatever currency you want to convert it to and buy stuff. And it used to be the case that you can actually just buy stuff with gold. And I think that could be a possibility in the future, which is something that I think people should think about. So yeah, the first reason is central banks are shifting away from US dollar assets towards gold assets. And this is primarily driven by how a lot of countries don't want to be vulnerable to US sanctions. And even before 2022, even in 2021, when I was mainly talking about inflation as a driver to buy gold, I think it still applied back in 2021, back in 2020, because I see geopolitically people are shifting away from the United States. They don't want to rely on the United States. They want to have more sovereignty. They want to have more control of their country, of their own sphere of influence, and they don't want to have to listen to the USA all the time. They don't want to be bossed around by the USA. So it's not just primary rivals of the USA like China, like Russia, like Iran. Even the European Union is shifting away from US dollar assets towards gold assets, towards its own currency as well. And it's something that you can see around the world. People are shifting away from relying on the United States. They want to be more independent, more safe, and less vulnerable to the USA. They don't want to be bossed around by the USA. And this is a primary driver of central banks shifting away from US dollar assets to gold assets. And that's driving the price of gold higher and higher because central banks are buying it. People are realizing that gold is going to be more in demand because of that. Some people may realize that gold is going to be considered more as money in the future, and that's why gold could be more valuable in the future, because not only can it be used for jewelry, for technology, for industry, like it's already being used, it can also be used as a financial instrument more and more in the future. And I think that is a trend that would continue. I think countries will continue to shift away from US dollar assets to gold assets. Now, the second reason why I thought gold is a good thing to hold is the problem with inflation, and specifically and fundamentally the problem with fiat currencies. The fiat currency system we have today is based on currencies that aren't backed by anything, and that can be printed anytime the government wants to print them. If you think about it, the US dollar today, it isn't backed by anything. If the US government wants to create more money, it can create more money. And if you look at the national debt problems the USA has, they have a huge incentive to print more money and expand the money supply. And back in 2021, I realized this because I was looking at the M1 money supply of the United States, and it's experienced a huge expansion in 2020, and it led to inflation problems. There was inflation, the money supply was being expanded, and people's purchasing power per US dollar was declining. And that's something that I realized. And gold is something that people can convert their US dollars into, or their other currency into, that can actually hold value because of its inherent value, because it's valuable in jewelry and technology and industry, and because of its monetary value as well, because central banks still consider gold as money, or they act like gold is still money. So instead of having your US dollars or your other currencies devalue through inflation, back in 2021, I was thinking that you can convert that money into gold and have it hold value and store its value, and even increase the value you bought it at. And that's something I thought about because of the huge inflation problem back in 2020, 2021, the huge expansion of the money supply. And I think that's going to continue. I think governments always have incentives to expand the money supply when they are in debt so that they can pay off their debts more easily. And because fiat currencies aren't backed by anything, there's really nothing that is stopping them if they want to create more money and print more money. They can just do it anytime they want. You're really relying on the goodwill and competence of your government if you rely on the national currency. So instead of allowing your currency to be vulnerable to devaluation through inflation, why not convert it to other assets like gold, like stocks, like real estate? I also talked about that. But I think gold for me, my mindset is gold is money. So of course, if there's good investment opportunities in stocks and private equity and real estate, then invest that money. But good opportunities don't always arise. They're not always available. So instead of just leaving your cash lying around being devalued through inflation, why not convert it into gold where it can store its value, where it can preserve its value, maybe even increase its value. And when you do identify good investment opportunities, you can convert that gold back into whatever currency you use and purchase those investment opportunities. So that was my mindset set back in 2021. And that was also a primary driver, I think, of investing in gold. In 2022, things changed because the US placed sanctions on Russia, and that was a huge wake-up call to a lot of countries. They realized that they will be vulnerable to US sanctions if they hold too much US dollar reserves. So you see a huge drive towards converting central bank assets into gold assets rather than US dollar assets. And I think recently gold assets have surpassed the euro as the second most held central bank reserve asset. Of course, because of the history of the US dollar being used as the global reserve currency, the US dollar is still the most held central bank reserve asset. But that is changing. It's It's changing because central banks are shifting away from the US dollar and towards gold. So those are the true reasons why, even back in 2021 and 2022, when the gold price was much lower than it is today, I was talking about gold. I was talking about investing in gold, buying gold, and I feel good that my thinking, my analysis proved to be right, and not only proved to be right, but proved to be very profitable. Because back in 2021, when I first published my first video talking about gold, about investing in gold, the price of gold was around 1,750 US dollars per ounce. And now it's almost 4,200 US dollars per ounce, which is more than double the price of what it was back in 2021 when I first made that video. It's a huge increase in price. It's a huge gain in investment, especially if you bought gold at that time. So if you bought gold at that time, you would see a huge increase in the US dollar value of the gold you hold. So that's something I wanted to talk about, because I want to talk about how in the past few years, because of those two reasons, because of central banks shifting away from the US dollar to gold, and because of the inherent problem with fiat currencies and inflation, gold has become more and more sought after, and you can see that reflected in the price of gold doubling and increasing, and the price of gold in US dollars has never been higher than it is in the past few weeks. And in the future, if you want me to talk about the future perspective of gold, I think the first reason is still going to be very important. The first reason I talked about central banks shifting away from US dollars to gold assets. And I think it's going to be even more prominent in the future when US hegemony declines and other countries want to be more independent from the USA. They want to be less reliant on the USA. I think that's going to be a huge driver in central banks shifting away from US dollars and towards gold. And that's going to continue to be the case. So you still have that driver, and you still have the inherent problem with fiat currencies and inflation, and that's always going to be there, and it always has been there since the end of the Bretton Woods system. So they will continue to be prominent reasons of driving the demand for gold and driving people to realize that gold is reliable, it's money, it's valuable. And on this channel, I'm more interested in helping people develop good thinking skills and teaching people how to think and how to invest and how to make good decisions, rather than telling them what to invest in, what to buy, what decisions to make. I'm more interested in helping you develop good thinking skills, becoming a good investor, and making good decisions. And that's why I want you to do your own analysis and think about what I said about gold. Of course, the gold price today is very high. If there are good investment opportunities and you already hold gold, you might want to convert that gold into those investment opportunities, especially if they are even more valuable than, or have an even stronger growth perspective than gold. So it's an analysis you have to do yourself. You have to evaluate the alternative investment opportunities if you are holding gold, and whether you want to convert that gold into those investment opportunities. Like if you think there's a stock that's going to do very well, then maybe convert that gold into stock. But I want you to do your own analysis. I want you to develop into a good thinker, a good investor, and learn how to think and how to invest, rather than just me telling you what to buy and what to invest in and what to do. So yeah, think about what I said. I think those two reasons that I already had back in 2021 and 2022 when I first started making videos about gold, and when the gold price was less than half it is today. I think those two reasons still hold, and they're still very prominent. And of course the gold price now is very high, so we'll see if it goes higher and higher. But for me, I think if there are good investment opportunities, I would convert gold into those investment opportunities. But I think the two main drivers of the soaring price of gold still holds. Gold still is going to be valuable. It's going to continue to be valuable. And you have to evaluate what price is so high that you think that it's gonna not continue to soar as much as it has soared in the past few years, and it may be a good idea to convert that gold into other investment opportunities. So yeah, I hope you enjoyed my video. If you did, please like my video, comment your thoughts, and subscribe to my channel. I'll see you in the next video.